There's a reason why 1% of the population keeps getting richer while the other 99% is getting broker. No, it's not because of luck, and it's not because of who your mommy and daddy are, for most people. It's because the people that become rich understand the rules of money, while the other 99% don't even know that these rules exist. But that ends today because I'm going to show you the 7 money rules that the system does not want you to know, starting with number 1. You're trained to be an employee in a world where investors get rich. If you are an employee at a company, your boss, the CEO, has a fiduciary duty, a legal duty to make one person rich. It's not the employee, it's not the customer, it's the owner, the shareholder, the investor. That means the work you're doing as an employee is working to drive profits, which goes into the hands of the investors. Investors work for profits, employees work for salaries. Your salary is capped based off of whatever your salary is. There's no limit to how much you can make as an investor. Now hear me very carefully. It's not a bad thing to be an employee. In fact, I am an employee. I'm an employee at my own company, Briefs Media. Yes, I'm the CEO there, but I'm also the investor. I'm the owner of the company. Your job is to learn how to leverage your salary as an employee to now become an investor. That way you don't have to keep relying on your salary. You can start becoming an owner. Once you own the assets, now your investments are working to make you money even when you're not working, because the reality is we're all taught to do this. We're all taught to be an employee. We're all taught to get a job, which is great, but that's not where it ends. Wealth is built through being an investor, not through being an employee. You need to use your salary to become an investor. Money rule number 2, your banker is not your financial advisor. Your bank is in the business of making money. The only problem is they are in the business of making money for the bank. They're not in the business of making money for you. And what happens is many people want to make a big financial purchase. They want to buy a house, they want to buy a car, they want to buy a boat, and then they go to their banker for financial advice on how big of a house I can buy, how luxury of a car I can buy, or how nice of a boat I can afford. And your banker wants to sell you the loan because the bigger the loan your bank issues, the bigger the commission check your banker gets. Can you use the bank to your advantage? 100%. But the majority of America is working very hard to make their banker richer instead of making themselves richer. Money rule number 3, looking rich does not equal being rich. The majority of Americans would rather look rich than be rich. And you might say, well, Jaspreet, what are you talking about? Everybody wants to become rich. Well, numbers don't lie. The average new car payment in America today is $742 a month, and that's just your car payment, while more than half of America has less than $1,000 sitting in their bank account. If I have $30 in my bank account, I can start my morning at Gucci, end my day at BMW, and still buy a bunch of stuff because these companies would love to sell me the financing plus their product because they get to make money twice. It's easy to look rich because everybody wants to sell you debt because it's profitable to sell you the financing plus selling you the product. But just because you have the nice things doesn't mean you can actually afford those nice things. Money rule number 4, there's more than one path to wealth. If you've ever searched how to become wealthy on the internet, you're gonna see some of the craziest content in the world. Some people will tell you that the only way to become wealthy is by investing in real estate. Others will say the best way to become wealthy is by trading stocks. Then somebody will tell you, screw real estate, screw trading stocks, go out and start a business. That's where you're gonna get the best return. And then the next person will tell you, why would you wanna start a business when you can just go out and buy a laundromat? There's more than one path to wealth. Some people have become incredibly wealthy by investing in real estate and never doing anything else. Some people have become incredibly wealthy by investing in stocks, never touching real estate. Some people have become incredibly wealthy by starting a business, never doing stocks and real estate. And some people have built so much wealth buying businesses and not doing anything else. You have to find the right path for you. What I have learned is that investing your money is the art of taking your money and putting it to work. You want to buy assets. What are those assets? Well, personal finance is personal. I like talking about stocks and real estate, but I also have my own business. I also invest in some speculative assets as well. So you have to find the right thing for you, and it's easy to get sucked in, and I want you to just go out and try things for yourself because you don't know what's going to work for you until you ultimately try it. Yes, you will lose money at some point. Yes, you will make mistakes, but you're not going to know unless you try. This is why my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, stocks, housing, crypto, and the global economy into a fun, witty, and easy to read newsletter. Plus, when you join Market Briefs, you'll also get my investing masterclass as a bonus, where I'll walk through different ways you can start investing and find investment opportunities before everybody else, free as a bonus, just for getting Market Briefs. So if you want to read Market Briefs plus get my investing masterclass as a bonus, all you have to do is click the link down in the description below. Money rule number 6 is there's no such thing as free money. Normally when I talk about this, I talk about this from a systemic perspective, because when you hear about the government giving you free things, whether it's a stimulus check, unemployment check, PPP loan, free healthcare, free college, free whatever, there's no such thing as free anything, because somebody has to pay for it. If we talk about free college, well, the teachers and professors are not going to work for free. The college has to pay for the land, the college has to pay for the books, the college has to pay for the stuff. Well, who's going to pay for that? If you're not paying for it as a consumer, well, somebody is paying for it. And if you don't know who's paying for it, well, that's a problem, because that might mean everybody's paying for it. The reason why I'm saying this is not to get political, but to get you to think about money a little bit differently, because the reality is there's a cost for everything. There's a cost to go to college, there's a cost for healthcare, there's a cost for mentorship. And when you start thinking about how you are going to build wealth, you might start asking for help. Well, if you want to ask for help, you have to understand that somebody has to give you something in exchange for help. And if somebody's giving you time, there's a cost for that time. And sometimes, I've seen this happen so many times, people assume that other people owe them time, effort, help, resources, whatever it might be, when in reality, if you're constantly relying on other people to get you to where you want to go, you're being held back by your own fake beliefs. The reason why I'm saying this is because if you're on your wealth journey and you keep asking people for free stuff and you cannot get to where you want to go because people won't give you stuff for free, well, that might be your problem. Money rule number 6 is your credit score is a scam. Many people assume that their credit score is their wealth score. The better my credit score, the more wealthy I am. If I have an 800 credit score, I must be wealthy. When in reality, your credit score does not show how much money you have. It does not show how much money you make. It does not show how much money is in your bank. It does not show how many assets you have. And it does not show how much cash flow you have. Your credit score only shows how likely you are to pay back your debt. And it's always not the best indicator of that, because if you pay off your debt, you're going to get a ding on your credit score. If you go out and get a mortgage, you're going to get hit on your credit score. If you open a new credit card, your credit score is going to get hit as well. Don't get caught up with the obsession that you need a great credit score in order to become wealthy. Your credit score is only there to help you qualify for more debt. And the problem is most people are using this more debt to go out and buy more liabilities. They're using their great credit score to qualify for a nicer BMW. They're using this nicer credit score to qualify for more things that take money out of your pocket. I want you to use your money as a tool to make money. Focus on buying assets, not liabilities. Your BMW, your Rolex, your clothes, your vacations, these are liabilities. They're taking money out of your pocket. Your rental properties, your stocks, your businesses, these you're buying to put money in your pocket. Focus on the assets, not the liabilities. And the credit score problem that I have with so many people is they're putting all this energy and time and sometimes money into building this credit score so they can finance more liabilities. Money rule number 7, invest in what's important to you. I often ask people, what's the most important things to you? And I'll get the same 3 answers. Number 1, being healthy. Number 2, being financially fit. And number 3, traveling. But when I look at the finances of those exact same people, their expenses, where they spend their money, looks like this. You spend money at Five Guys, your expensive car payment, Cold Stone, an expensive apartment, and then a lot of Cheesecake Factory, which means what you want is not what you're doing. And this is where, if you can do one thing in this video, it's I want you to spend 60 seconds thinking about the 3 most important things for you. What do you want to see happen in your life over the next 12 months? And then look at what you're doing with your money and see if they align. If health is important to you, put some money into a gym membership. Put some money into getting a trainer. Put some money into getting a nutritionist. If that's what's important to you, spend some money there. If what's important to you is getting your finances right, put some money there. Maybe read some books. Maybe take some classes. Maybe invest in some investment research that we can find better investment opportunities. Find what's important to you. Write it down and then see where you're spending your money and see if they're aligning. Because if you say, I want to get rich, I want to become wealthy, I don't want to stress about money, and now your expenses are your BMW car payment, your expensive apartment, all these fancy vacations, all this eating out, well, what you're doing is not aligning with what you want. then you gotta make some changes. And there you have it, the 7 money rules that are holding a lot of people back. If you have $100 in your bank account and you want to buy this $1,000 Gucci scarf, your bank would love to lend you the $900 at 25% APR, because when you make the minimum monthly payments, your banker gets richer. But that's just the beginning. When it's time for you to buy a house, who do you ask? How big of a house should I buy? Many times it's your banker, and they're not your financial